Welcome back for your weekend. I hope you had a great time. Just a quick look at the Dow on the action we saw on Friday. So we had a gap here. We triggered short, went back to the midline, a little bit higher, and then dropped. We didn't get a complete fade. We got a partial retracement, and then we just waved down. So we ended up with a 1, 2, 3, 4, 5, and a 1, 2, 3 wave correction. If you're not interested in any wave, fine. I think it really helps you sort of plot the day out. But here we are, gap down, and we've just gone 9 o'clock UK time and just losing support here as well. Busy week. We've got about 14 of the Dow 30 stocks delivering earnings, so we're into the earnings season now. On a gap fill, and we've got GDP on Friday as well for the US, Bank of England on Thursday. China's off all week because of Chinese New Year. So ideally, I'd like at least a pullback to 840 area, or complete retracement back to the gap at 950. If we don't get that, there's not to say we are going to gap fill. Markets tend to fill the gaps. They don't like leaving gaps open. So it's a question of selling rallies here. So let's just go to the bigger time frames. So you can see on this daily chart we've fallen right into this trend line. Trend line comes from October lows, December lows, and early January lows. So there's a lot of touches here, and we've just come right into this dotted trend line. I've got it dotted because it's the very latest trend line. So there's the gap. So if we can, 950 is the 20-day average. So I would stick to. My thought went through my mind. Well, if we come down to the massive trend line, then maybe we can just pop right back up. Yeah, that's possible. I mean, there's coronavirus that appears to have dragged this down. Well, certainly one of the impetus to drag this down is not. It's a US related. It's obviously a global issue rather than a US specific issue. So it's possible we could turn around and come back up. Right the way up, I mean, but the path of least resistance is a bounce off this trend line into that 950 area that I just talked about, and then come and find the January lows. At which point, I mean, if that pans out, at which time this January low, assuming that holds, could lift us up into February, March. Okay, so the most likely scenario is retracement, pullback. If we fail the gap area, then we're going to come in lower. Okay, so we just have to keep pace of this day by day, but on the face of it, with a gap down like that, we need to short the rally. Okay, let's have a look at the DAX. Obviously the DAX has done pretty much the same. So 2019 highs is 467, so that would, but any move back into this resistance area is now a potential short area. This is now a tough area. Okay, so at the moment, it's a short term. I would just sit there and try and get an opportunity to short underneath this trend line. So very, very similar setup to the Dow, but just the trend line's in a slightly different position. Okay, gold is higher from where I left it. I left it off at 1565 and now 1580. So similar story. Any push lower into that gap fill, any push lower into that 1565 area is a potential buy to see if we can get back up. Oil is sunk at the moment. So we've got decent support down at 51.80. At this point, again, sell into any gap fill 54.35 or 55 area. I'm just leaving it alone. I'll just let this play out and stand aside and give that more time. Gas has at long last started to perk up, but it's still struggling. If this is a bearish consolidation, then same story with indices. Any push into that 2030 could see that drop lower. In an ideal situation, I would see that drop to 1788. And then if we get a cold snap in February, that might perk up, but it's otherwise backing off. And soybeans, obviously very sensitive to what's happening in China. I expected to see $9, but markets tend to overreact. So the fact we're coming into potentially this $93 pullback area is not a surprise. Again, I'll leave it and start nibbling longer once this settles down. Alright, so seen some selling into the London Open. Let's have a look at the, sorry, let's just go back to the indices for a minute. Let's have a look at the FTSE. Yeah. So we perked above that resistance area and been winding our way down. So this is actually ahead of the DAX and the Dow. This was very weak, right, most of last week. So we're just reconnecting with some of these major indices. This is an 89-day average down here in the 7400 area. So it makes sense for that to come down, and then if we are going to maintain a bullish mood as we get into February, then we need to be patient and see what happens to these lower levels. Okay, but my biggest message to you is trust the golden anchor. Let's go back to the Dow on Friday for a moment. This area up here, if I go back, I updated it, but if I put it back to where we were in the room on Friday, we were looking at that. So we weren't quite at the 127 extension, but we were very high. We were close to the 127 extension, very close to it. So at 3 o'clock we closed lower and engulfed the last 2-3 bars. Pullback that I talked about in the 5-minute chart, and then we waved to the downside. So we effectively went from almost a plus 127 to beyond the minus 127. So a nice move. Took a while. You get a few higher closes in there, but overall you get the wave count and the push into that lower level if you just either held out or just kept shorting any highs, depending on whether you were scalping in smaller time frames or trading that in a bigger 15, 30, 60-minute time frame. Okay, I will give you another video. I'll do another video late in the evening tonight to help us pin down some more levels that we can watch. Okay, but should be an interesting week ahead. Like I said, China's away all week because it's New Year for them, and we have actually got a busy data week and an earnings week. So let's hope we get a lot of volatility. Let's hope this can bounce around and we can pick off some levels. Okay, be careful, manage your risk, and I'll talk to you soon. Bye.